Hey guys, what's going on? Welcome back to another case study. Today we'll be covering Eurodollar shorts in New York session. Price action was on Tuesday, September 26th. Okay, so let's get right into this. Start up in the 15-minute here. This is where the story is told. So Monday, this is Tuesday price action. Monday we sold off in New York, printed this low, went bullish, printed this high, respecting this area in the left. Okay, and then from here, from this high, we sold back off. And then Tuesday in London, we printed this low, and we went bullish back up to these highs. So what does this tell me? Sellers induced once this low is taken. Okay, so we sweep that liquidity at the lows, and from here we go bullish. And think of the objective. The objective is going to be these highs here, right? So we go bullish, dig ref all for this liquidity, and then we trap sellers as soon as this high is taken right here. Okay, what does that tell me? Well, now we can see a possible move back to the downside. So we can look for short positions. Okay, now we have to see that buildup occur, which looks like we're getting right now. This is at 7 a.m. my time, which is an hour before New York Open. So there's New York Open right there. But yeah, so now it looks like we're getting that buildup. So notice how price when it went bullish here, it never gave us a buildup before, right? And then when it took the high, and now it's giving us that buildup here, okay? And where is it building up at? Well, it's building up at this area to the left-hand side. So if we simply grab this high, 106.07 should get taken, right? Because that's where the buildup is occurring. All right, so we'll mark that high on. We can also, here, let's go a little bit further. You can see that we took the low here. So this is now induced sellers into the market. Expect sellers to be selling these areas here or even here, right? So this is going to be a trap. We want to see this high taken. Okay, next. And then we also have that 106.07 we got our eyes on. Okay. Okay, so now we're trading these areas, rejecting it a little bit, slowing down, slow rejection. So 20 minutes we are hanging around at the highs, inducing sellers, and then we take them out. Perfect. So now the lower time frame is starting to align with that story from the higher. Okay, so now we have that buildup occur here. Now it looks like we're running it. Now we just need to have the lower time frames, aka the 1 minute. If you're going to look for a confirmation based entry, you need the 1 minute to align for us now as well. So let's continue price action. Looks like we took the high, another sell off, taking the low, which is now inducing sellers again. Same thing. We can expect this high to get taken next. And again, 106.07. Keep an eye on that. Okay, so this is area as a buildup. So now we have this buildup occur here. Okay, and now we're approaching 106.07. Perfect. Now we're above it now. So now if you look at this from a 5-minute perspective, we have now taken all the sellers out here. Now the lower time frames is aligning with our story. This is now screaming shorts to me. Okay, something you have to keep your eye on though is we don't have liquidity at the lows yet, so you can maybe expect choppier price action on the way down at this area possibly, and then we have this area down here. Don't get me wrong, every time it gives a reaction we can sell it, but overall we want to be targeting this low down here. So 105.70. Yeah, so that is what we're going to be looking to target. Now, how can we get involved in this entry? Well, now we've taken out the early sellers here. The 1 minute has even given us a build up here, and we've also taken out 106.07. Now we're on the 5 minute here, and there is a liquidity block entry given to us right here. Okay, so entry number one, simple stuff. Entry at the liquidity block, 3.8. We can just go to 5 pips. Open it up, no problem. And target the lows down here. Perfect. Next candles come in, we get tagged in here. Then we start moving to the downside. Perfect. Okay, so I believe on this day we had news at 10 a.m. also, right around this time. So we can stay aware of that. Okay, so I can't really see what's going on the 5 minute here, so let's go to the 1. I wasn't able to take this entry at the highs, but I did take one after news was announced, and I'll show you whereabouts now. So, as you can see, look how before news was announced at 10 a.m. Look how the market now induces sellers, right? Look at the structure we get here for them, right? High, low, high, low. This tells me lots of liquidity tuck above this high, and most likely this high here, right? Because think about it, this whole area got mitigated like this. So if sellers are getting in at these areas, stop losses go above the high, okay? So what we can expect is a move up, grab that seller liquidity, and this also induces buyers into the market, retail thinking these highs getting taken are breaking structures. So you can expect maybe false reaction at the low and then continue lower. It's definitely a possibility. My entry was taken as soon as this high was taken out here, just like this. Now, as for the stop loss, this was actually a hard one kind of pinpoint because look how we have all these imbalances here. There's no really any highs for us to kind of gauge a stop loss. So I gave myself like a 5-ish pip stop. I noticed that what reason would we have to go any higher, right? The liquidity is taken out here on the 1 minute, right? These highs are taken. So there's not really any reason to go higher. And if we do go higher, that just simply means my trade is probably going to be invalid. But yeah, that was my whole thought process behind it. As soon as we take this low down here, I was going to roll my stop. So let's get to that point, inducing buyers, and then we take them out. So as soon as we took this low, now my stop, it gets rolled just above the high. So we can put it to like here now. Okay, simple stuff. Now my risk, is cut in half. Actually, it's even more cut in half. It's like if you risk 1%, this is probably just like 0.20% now on the table, so that we've done our job. Now we let the market do the rest. We get a pullback, no problem, and we continue selling off. Still stalling at the lows a little bit, inducing buyers, which is okay, no problem. It's to be expected. And then finally, target achieved here. Perfect. So, very clean stuff. Just to quickly go over, from this low to this high, this is induced buyers when we take out this high over here. So look how buyers induced here, and that's why we're going to have tons of liquidity tucked below this low, and that's why the market hunts for that. Okay, so I hope you guys enjoyed this case study, and I will see you guys in the next one.